let's begin by getting in the fine print. And Vipul Jhaveri, Managing Partner Tax of Deloitte India, is joining me now for more on that. Vipul, thank you so much for speaking with us right here on the India Development Debate. So much has been said in terms of a broad overview on the budget. What were your top 2 or 3 takeaways if I were to ask you to surmise what really we got from this budget?
Yeah, thanks, Tamanna. Well, the budget on face of it is remarkably unremarkable by its simple, straightforward, honest approach insofar as the tax provisions are concerned. But absolutely remarkable in remaining in context of the certain principles that it has adhered to, which are, simplicity, bringing stableness and credibility in the tax regime, improving the ease of doing business, extending certain tax incentives also, while by default, this regime doesn't encourage tax concessions and incentives, but these are a couple of incentives that have been chosen to be given and an extension given. So in that sense, I think the budget is really outstanding. On the highlight of this is their special attention to the ease of doing business. And within that, tax litigation has been one of the biggest bone of contentions for taxpayers, whether from India or international. And in that, this is really path-breaking for the government to, bring in the International Arbitration Center in the gift city for settlement of tax disputes. Now, this can have a far-reaching effect. For a long time, we have, studiously avoided that, but I think the recognition has dawned that this is something that will help us, climb up the ladder on the ease of doing business. The other is, way of managing the controversies is through a provision which is in some sense new and very innovative, which is updating returns. Now, through this, what is sought to be done is reduce litigation if there is a opportunity that I get, a window of opportunity which is given up to 2 years to revise my return, pay additional tax, and get along with life rather than get into disputes. And the third is, the most interesting is the avoiding repetitive appeals by the revenue. As we all know, revenue is the biggest litigator, and which litigation clogs up the judiciary, and therefore this is one smart way of reducing the pendency in the courts, and then without taking away the right of the revenue authorities to re-agitate that in the event the initial year in which the litigation has occurred is decided in their favor. So all in all, I think this is a very sound budget.
So let me come to a bit of the fine print, and let's pick up the biggest one over there. Allowing people to update their tax returns 2 years after the assessment. What are the finer details that are emerging? You spoke and mentioned very briefly about paying a penalty about it. So that is something which has escaped a lot of people's notice.
True. So of course, while presently, if I submit a tax return, I can revise it up to the end of the year, assessment year. And this gives me 2 years in addition to that, which is therefore called differently as updating. Now, if I update it by end of 1 year, which is effectively 2 years from end of the tax year, then I have to pay, in addition to the tax on income which I am adding on to my original returned income, I have to pay an additional tax of 25%, which is almost like you may call it penal interest or penalty or whatever. And if I do it by end of 2 years, then I have to pay 50%. So it is the tax amount plus 25 or 50% as the case may be. And that's something which has been brought on. So there is a cost to this updation, ability to update your return, but that's the price one will have to pay to avoid litigation.
Another place where that has been underlined is on the announcement on crypto assets or digital assets. What kind of an impact do you think it will have, considering a lot of HNIs have also now newly discovered the joys of crypto?
Yes, while of course there have been lot of representations to the government to bring about clarity on crypto currency, the expectation was that it would be given the treatment of a capital asset, and therefore the provisions of capital gain, depending on whether it's long-term, short-term, and the tax rates relating to the category of asset and the class of taxpayer, that would be applicable. And that would have actually simplified the taxation of crypto. However, it appears that the government is very clear in its mind that it doesn't want to equate it with the capital asset and give the benefit of taxation regime of capital gains. And therefore, it has said that the surplus on that would be taxed at 30%, and whatever applicable surcharges. And the other interesting thing is that any losses that may occur, because we all know that the crypto is fairly volatile in its value, and therefore there could be losses. And if there are losses, those losses are not going to be available to offset against other income. So that is a downside to be borne in mind. And finally, insofar as the carry forward is concerned, one can carry it forward only to be offset against that loss.
Okay, so a lot of fine print there emerging. Thank you so much, Vipul, for joining us right on top of the India development debate tonight and clarifying some of the finer details of what this budget has meant for taxation.